All right. Do I have the permission to record this meeting?
You have.
So, I would like to welcome everyone on episode 4 of Uncharted. This is going to be one of the most exciting episodes because we are going to be talking about money and more specifically about investments in Germany. And there would be a special focus on real estate investing because the guest today we have is one of the most energetic consultants I've ever met. He is very disciplined and very transparent and makes you comfortable about any kinds of question you would like to ask. And a bit of introduction about him. His name is Loui Sera. He has been working in this industry for a long time now. He is helping a lot of English speaking people in the country with real estate investing. And of course, even if you speak German, he's going to help you as well. And he has served in German military. After that, he moved on to be working in a lot of asset classes as a retail investor and by profession as well. To name a few, he has been working in golds, jewelry, and ETFs, mutual funds, and now he's sticking to real estate. Um, the reason he has chosen real estate is because he thinks this provides the most value to the retail investors right now. And right now, he is working with this company, IRE Berlin. And yeah, I guess there are a lot of things to be talked about, the background which he has. And I would like to invite you on the stage to tell us a bit more about yourselves. Welcome, Loui Sera. Very excited to
Thank
have
you
you.
very much. Thank you very much for your warm words, Abhinav. It's an honor and a pleasure also from my side to be your first German guest in this podcast,
Yeah,
right?
right.
Yeah, I think you already mentioned a lot of my background and the topics that I was going through. And yeah, as you already mentioned, I'm working as a real estate consultant for IRE Berlin, and we provide a 360-degree service for expats to become real estate investors. Yeah, so we help in getting a loan and finding tenants, in doing the administration for properties, and yeah, this is what we do.
Yeah. So yeah, before we start, I would like to ask you a bit about your background, the like from where you come from, and how's your experience been in your career, as like what brings you here finally, and other things as well, which helps our audience to know you more as a person.
Yeah, I would love to. So actually, why did I start to think about investments for the first time? I have entrepreneurs in my family background. So my grandfather used to run a company in the metal industry, and back then I realized that high income in Germany is not really connected to financial intelligence. You know, there are a lot of people with a decent income, and they have basically no idea about how money works and how to also build up financial freedom.
Yeah.
Yeah, you're
That's
pointing
me.
on yourself.
Yeah.
And yeah, soon I also realized actually that income in Germany is taxed very, very high, and wealth on the other side is taxed very low. So I started to read books during my time in the military, and yeah, started to understand how money works. This was also then the time when I met our today's CEO of IRE Berlin, Arslan Gokiev is his name. And yeah, he showed me how to turn high taxed income into tax beneficial assets with real estate. Yeah, this was then how I slipped into the game of real estate.
Nice. And how much time have you been working with specifically real estate now?
With real estate, I've been working now in the as a consultant for 2 years.
Oh, nice.
Yeah.
And how has your experience been with other classes? If you, yeah,
Mhm.
like we would talk about it in detail, but
Mhm.
yeah, like how much experience did you put in like before real estate, exploring other instruments?
Mhm. Yeah, so I've been working for Tekis. This is a very big German asset manager, financial consulting company, and they mainly focus on the topic of saving or securing your income with insurances. You know, the world of insurances in Germany is kind of crazy
Yeah.
and also very hard to understand, but also interesting and beneficial if you know how to use it in a proper way.
Hmm.
And also the topic of pension schemes. I think same as in India, there are various pension schemes that you can use also in Germany, tax
Hmm.
beneficial ones. And this was basically then the first asset that I worked with by profession, insurances and pension schemes.
Okay.
And then as a retail investor, I think same as almost any person in the world, I also was into cryptocurrencies a little bit. For me, myself, it did not work so well. I was more gambling than understanding what I was doing. So
Hmm.
this is not the field where I specialize in.
Like
Um,
sorry to interrupt, but I create stuff on blockchain, but even I face losses, so that's completely, yeah, understandable.
yeah, you know, it's a game of psychology. I think you really need to understand psychology to be successful in maybe manipulated markets.
Pretty
Yeah,
much everything.
yeah,
Pretty much
yeah,
everything.
yeah,
Yeah.
of course. And I would say my most practical experience is actually with gold. Yeah,
Mm.
so I really like um, to to feel gold, to have gold in my hands, also to trade with it, and also jewelry is one of my biggest hobbies.
Oh, nice, nice. I've never seen you wearing something, although
No, I'm not wearing it, I'm collecting it.
it's collected. Nice, nice. Okay, so you have a lot of like very dense experience in a lot all things finance. I would say that gets me excited about actually using you for understanding. I do not have much knowledge about how real estate works, specifically in Germany, maybe a bit in India. So you have told me a bit earlier, but please take our audience on the same journey in which they
Mhm.
can understand how the German real estate market works and how might it be different from other countries if you would like to compare.
Okay. So where do we start? Real estate differs in basically two big sections. So we have real estate for your own use, and we have the classic home, which I know is very appreciated in India. Basically, everybody with money wants to own their own house. I
Mhm.
think it's also very reasonable. And the other thing is investment property. And we really have to tell this apart. So a home is something where you move in and live with your family. And an investment property is something that you put on rent to make money with it. And when it comes to taxes and to tax benefits, there are huge differences that I'm pretty sure we are going to discover today.
Yeah. Okay.
Yeah.
Let's say if somebody wants to enter this world, let's say somebody is working here and now he has absolutely zero knowledge and he will be watching this video to enter the world of real estate. What should he be thinking about? What he should be aware about? Of course, the best way is to contact a consultant, but to do some homework, to do some research. How do we start in this area?
Hmm. I think the first thing that has to be in place is your mindset. It always starts with mindset. What do I mean by this? Mm, we have common fears, like people think that they spend money when they buy real estate. But this is actually not true. So if you buy real estate, you transfer your money to another currency. Yeah, real estate is kind of a currency, and it's a really existing currency, not the printed notes that we use to pay for groceries. So this is something that you have to adjust in your mindset. If you invest in real estate, this is not a spending, it's a change of your money into another currency.
Right.
Yeah.
But then when you are actually going to be exchanging this for another currency, you would like to explore a lot of options. And then while you're doing that, one may realize that the main thing about investing in real estate is the information arbitrage. There are a lot of options. There are a lot of websites, let's say Immobillion. I only know one, but there would be probably more than that. And then they can find out properties by themselves. They can get in touch with some brokers, consultants, and it's not just the first step. And because after that, because you do not know about the rules in this country, how the transaction is going to work, how are you going to be bound by law, uh, what should be the best course of action? First, like how you should be choosing a property, what all things you should be thinking about, and then yeah, we can talk about the further part after this question.
Mm-hmm. Um, so it depends on your goal. If you want to achieve financial freedom in, let's say, 15 years, then it's highly recommended from my side to work together with a consultant who can guide you through this whole journey. Because building up an investment portfolio of multiple properties is completely different, yeah, if you compare it to just buying one home or maybe one investment property. So on ImmoScout24, for example, a platform that I'm pretty sure most people already know about, you can find properties there that you can purchase. But if you do so, you have to carry about everything by your own. So it would be better to understand the German language or to be able to talk German. Yeah, you need to apply for a mortgage on your own. If you rent out the place, you need to find a management company, or you manage on your own. You have to find tenants. You have to understand the German tenancy law. So there are many obstacles that you can avoid if you are working together with an expert from the beginning.
Right. Um, and let's say once you take the decision of buying the property, as you said, this is not the only step in considering it as a viable investment option, because then comes finding tenants, keeping the maintenance things in place, and a few other tasks like filing the taxes the right way, optimizing them the right way, moving your money into the right direction. What all things needs to be taken care of, and yeah, about that, please.
Yeah, so that's a good question because you actually have to connect a lot of things. And this is why I say IRE Berlin is and kind of an ecosystem. Yeah, so we create an environment, and what we bring together is the topic of project development. So first of all, you have to build a house, or you need to take an existing house and renovate it, bring it to a good condition. Filing the taxes, yeah, it's I get a lot of inquiries from English speaking people that are looking for an English speaking tax advisor in Germany. This is pretty hard. Yeah, you need the administration of the property, like tenants doing utility statements and all this stuff, and also, as I already mentioned, to apply for mortgage. It's also not so easy. Yeah, so these are the things you need to know, you need to do if you invest in real estate.
Yeah. So yeah, I guess that then it totally makes sense, especially for the expats who are not so well versed with the system, to actually get in touch with a consultant who can actually manage everything, not just connect you with the property, because it's a long time. Which takes me to the another question. When somebody is going to buy a property, two major questions which come to mind are: one, how would be the ticket sizes, and the second one is how long the money is going to be locked in. Oh,
Yeah. Yeah. So I really like that you asked this question right now, because this is a very common question. And I would like to adjust your mindset here a little bit. Because I can immediately tell if the one I'm speaking to is an experienced investor or not by the questions he's
yeah,
asking.
yeah,
So, because an investor always asks, what do I get from it, before he asks, what do I have to put in?
right, right.
But most people ask, okay, what is the minimum amount of money that I can spend to invest in an
Mm,
apartment?
yeah.
Yeah. I think this is not the perfect first question, but still, I would like to answer it. And I think, mm, if you invest in a good location, for example, Frankfurt or Berlin or Leipzig, like big cities in Germany, then you should calculate with an upfront investment of 20 to 25,000 euros. Of course, you can also make investments with even less amount of money, but then it's complicated to
Mm-hmm.
find a property that suits your ticket size. So it's hard to find apartments between 100 and 150K in the named big cities.
Mm-hmm.
Yeah.
Yeah. And about the lock-in period, once we get the property, how long should we holding on to it? And uh, what happens if we decide earlier than the most optimal point of sale?
Hmm.
How's that working?
Yeah. So real estate is a long-term investment, and I always recommend to hold a buy and hold property for at least 10 years. Why? I think you already know why.
Yeah,
We already talked about it.
because of the
Yeah.
tax benefit when you're going to be making a sale, you do not have to pay the taxes on the sale.
Yeah, exactly. So your capital gains are then tax-free, which I think it's a beautiful regulation in Germany.
Yeah.
And this is why a 10 years period is most beneficially.
Mm-hmm.
I also know that many people, especially expats, maybe plan on leaving Germany in future years, like 5, 6, 7 years down the line. And then they ask me, okay, Louis, is it still beneficial to invest in real estate?
Mm-hmm.
It depends.
Oh, I
Because
thought it was independent of because you already have your investment. Whenever you want to deal with it, you can. But it's not the
yeah,
same.
yeah. So when you leave the country, for example, and have a proper management that takes care of your property, then there's absolutely no problem
Okay.
in holding it. And if you have
Mhm.
left the country, sorry. Mm, and I think the ideal goal should be to leave Germany with more money than when you arrive in Germany.
Yeah.
So yeah,
Yeah. Yeah.
the optimum goal would be to build up a passive income.
Yeah.
And real estate is a suitable asset group to build up passive income through rental income that you generate.
Mhm. Yeah. So now that you have educated me about what should be the right mindset, what should be the first questions you should be asking when you're going to be making any kind of investment, this brings me to the question: how much returns can someone expect? I know this might be varying over a wide spectrum, but to give us an idea, what would be the returns in percentage?
Mhm. So let's say we expect real estate in a very good location to grow by 2 or 3% per year.
Mhm.
Indians will now laugh and say, okay, Indian real estate is appreciating much more. What are the rates you are used to?
Oh, in last years, let's say last 2 to 3 years, people have seen like 35% increase in some places like Bangalore, Gurgaon, but a lot of them have been saturated now. Like if somebody is going there now, probably not the same. Now the target area is tier two cities. Then you have to do your own research, which in
Yeah.
which you can have that boom. But yeah, it's been
Hmm.
an exceptional situation in the last 2 years, but not usually. But yeah, I have to take the break to compare it with other investments coming from an Indian investor mind. Um, People would be putting in a lot of other in asset classes, like most safe class being the fixed deposit that also have been giving like about 6 to 7% returns as well. So if somebody thinks about, okay, I'm going to be having 2 to 3%, it sounds a bit less. Another thing is, yeah, the if you put your money back in India, bringing it out of the country is, I guess, taxed at 20%. So that is something which a lot of Indians probably would miss while quickly making the investment. So if you actually plan to stay in Germany or out of India and you put a lot of money in the India, taking it out is going to be a problem.
Mhm. Yeah, okay. Thanks for sharing this insight. This is, yeah, you have to take it into account. And I also think you should invest in the country where you live. Because in
Mhm.
Germany, as I already mentioned, when you rent out an apartment, then you can claim tax benefits. Maybe we can explain in detail later how this works.
Mhm.
So the tax benefits are actually something that can increase our returns significantly. Would like to give you an example. If you invest in an older building that needs a renovation and, and you purchase it and do the renovation after purchase, so let's say you put 30,000 euros to renovate your whole apartment, then you can deduct this amount from your taxable income, leading to a tax refund if you have a decent income, if you're on the top tax bracket, leading to a tax refund of more than 12,000 euros.
Yeah, that's crazy.
So what I want to say is through the tax benefits, yeah, we can achieve returns of 40% per year because the money that we invest
Mhm.
is something that we can state in our tax files to get a big amount of it back.
Yeah. Yeah, that
Yeah.
makes a huge difference if we actually compare it to other classes, other instruments in the same country as well. If you have to compare it to ETFs, mutual funds, and let's say gold investments, we would not be getting these kind of tax benefits as we have in real estate, right?
Yes, that's true. So we have some, as I mentioned in the beginning, we have a pension scheme that
Mm.
is also tax beneficial, but definitely not such an efficient way as real estate.
Yeah, also the pension scheme would only pay you back after a very, very long time and probably would not give the same returns as you said.
That's true. Yeah, the costs of these the pension schemes are also very, very expensive. Yeah, so you have to understand if you invest in a pension plan, then at least in the first years, a big amount of your money goes directly into the pocket of also your financial advisor or the insurance company.
Hmm.
So yeah, it's
Yeah.
definitely a way to save taxes, but at the end of the day, you have to think, hey, is it worth it, or do I maybe pay twice the amount that I save in taxes in fees?
Hmm. Yeah, that gets me curious about, okay, we got one property this year, and as you have said that we can build a wealth building plan of let's say 10 years or more. How what can be the framework of somebody, let's say, already started with, I have a property this year. Now, what should I be looking into the future for the next 10 years by growth
So
perspective?
you okay, so let's say you purchase an investment property today.
And let's say IRE
Right.
Berlin
Was
is
this was
taking.
the question?
Yes, yes. I mean, I have already got the property, and IRE Berlin is taking care of it.
Okay.
I'm free. I have put my
Mhm.
money, and it's working for, let's say, 10 years
Yep.
at least. Now, for the coming 10 years, I also have the opportunity to invest in other real estate because a beautiful thing about this country is you can get loans for a cheaper amount than probably other countries where you would be seeing growth in real estate. So, what should be the plan of wealth building, like accumulating properties?
Yeah. So this is turbo capitalism. Yeah, you can acquire multiple properties in Germany. Let's say you made your first investment. Let's say it appreciates by 2% per year, and
Mm-hmm.
maybe your current value of the property is 100,000 euros. So let's say next year your property is worth 102,000 euros. Your down payment was only 10,000 euros. So you used 10,000 euros to buy a property of 100,000. It appreciates by 2,000 euros. So you turn 10,000 into 12,000, 2,000 euros profit. That's a return of 20%.
Yeah.
So this, first of all, capital gains of Germany are pretty high because of the leverage effect. And to come back to your question, if you know how to structure a portfolio, if you understand how a cash flow works, so the difference between all revenue and all expenditure of your property, and if you keep the cash flow of your portfolio almost neutral or slightly positive, then this actually improves your creditworthiness. And if you have an income that is high enough, let's say 3,000 euros net every month, then you can actually make one investment in real estate every year or every second year.
Yeah,
So you
then
can acquire 5 to 10 properties in 10 years.
that sounds pretty good. And I also remember you talking about a difference between what kind of properties you can buy. There are properties which you can make tax benefits out of because the old properties which you renovated, but there's also an option of new properties. How do both of them compare?
Yeah. So in the beginning, I mostly recommend to invest in an old building that you renovate after purchase because of the mentioned tax benefits. So let's say you invest 20,000 euros to buy a property. Included in the purchase price is already the renovation. And after purchase, your apartment will be renovated. So next year, you get a tax refund of the German tax office of, let's say, 8 or 10,000 euros. So now you can use this money, add another 10 grand from your savings, and use it as a down payment for your second property. And do the same thing again, renovate a property again. So this is how you can leverage your tax savings to build up your first few apartments. And then when the time has come, you can switch and invest in new buildings. You have to know that new buildings have, in most cases, a worse rental yield because a new building is just very expensive, you know? So this means that your rental income that you generate most likely won't be able to fully cover your EMI, your monthly bank installment. I think the Indian community knows the term of EMI.
Yeah,
Yeah.
yeah.
So then you can make a switch. You can invest in new buildings because new buildings, this is something that you can hold forever in your portfolio. Has the best energy efficiency, very good quality, and you can keep it in your portfolio for long-term passive income because rents will increase. Yeah.
Okay.
And renovated old buildings, you can sell them after 10 years without paying taxes on your capital gains, and you can use your capital gains to pay back the mortgages of your new buildings partially. Yeah. So this is a strategic portfolio building. First of all, leveraging your taxes, then investing in new builds, selling your renovated old buildings to pay back a big amount of your debts that come with your new buildings.
Yeah. Pretty good. I'm just surprised that a lot of people just do not know about it, like absolutely nothing about this particular strategies and even the avenues which real estate has to provide. So this actually is a very, very good or like ranks very high in the priorities where you can build wealth on
Yeah.
in the years to come.
You also asked me in before the podcast what sparked my passion to work with real estate. And there is this saying that my father once taught me, and it goes like this: 3 things in life will never come back. The arrow shot from the bow, the word spoken in haste, and the missed opportunity.
Yeah.
And once I understood how the global financial system, how capitalism works, letting debt, creating an income and a cash flow for you, I knew that real estate was an opportunity I didn't want to miss.
Yeah. And it can get as good as early as you board the train. So yeah,
Yeah.
definitely. Okay.
Mhm.
So we have talked about all the good things about real estate and when somebody is entering, what can be the strategies. Now let's talk about the dark side of it as well. Somebody can also get into, let's say, somebody got into wrong with touch with the wrong consultant, wrong broker, made a wrong deal, and yeah, basically, what all are the risks which can when someone which someone can expect and how to mitigate them?
Yeah. So I think the two biggest risks that you can run in is, first of all, the risk of loss of tenant. So when
Mhm.
you're not able to rent out your property and you lose your rental income, then you have to pay the EMI out of your own pocket. That's definitely a big risk, because then the best case, looking beautifully on paper, can turn into poor horror. Because from one day to another, you have to pay 1,500 or 2,000 euros out of your own pocket. And I think the second thing is running into high costs because you didn't analyze the condition of the property when you purchased. So let's say in 5 years, you find out that the heating is lacking and you
Mhm.
have to replace the heating, or the roof is damaged, you have to replace the roof. This will be very costly. So I think these are the two biggest risks that you can have: losing your tenant and upcoming damages to your house.
Yeah.
Yeah.
So the best way for someone who do not actually has the time to put in research in all those things, somebody who has a full-time job is, which I understand, hire the right consultant and take your time and understand everything and then make the right move, right?
Yeah, yeah, for
Yeah.
sure.
Mhm.
I think, may I tell about how to reduce these risks or
Yes, please.
to
Yeah,
wipe
yeah,
them out? I think
yeah,
because
yeah.
talking about a problem without a solution is
Yeah,
not.
I put
It's not
everything on you that he's gonna take care. Just yeah,
okay.
yeah.
Okay, yeah, let's go for it. So risk of tenant, or loss of tenant, is also called vacancy. Yeah, to have a vacant apartment. And the vacancy, you can actually, there's the statistics for the vacancy of big cities. For example, in Berlin, the vacancy is, I think, 0.3%. So 0.3% of the apartments are not rented out. So by choosing our investment location, where to buy a property, we can already wipe out the risk of loss of tenant, the risk of vacancy.
Nice.
Yeah. We have to invest in places with a very, very high demand of tenants, where people want to live.
Sorry to interrupt, but I have a question there. Like, wouldn't it interfere with the other motive which we have in mind is like greater appreciation? In these kind of places, there might also be saturation built up already. And if you compare it to other cities which are about to grow or expected to grow very fast, the appreciation would be more. So is it a trade-off which we are going to make, or I'm also missing something here?
Mhm. Yeah, so as usually with investments, the more security you add to your portfolio, the less your returns are. So this is for sure.
Mhm.
You can definitely invest in emerging cities, for example, Leipzig, where we expect a better growth or a better appreciation of the properties. This can also be a good thing. What can be risky is invest in cities where we expect a very, very high appreciation in value, but where we have a high vacancy rate.
Mhm.
So it's very important for buy and hold. Buy and hold is long term. So you always need to have a tenant, a financially stable tenant, who pays your EMI for you. Otherwise, the case turns into horror. And therefore, it's actually very simple. You just have to look what cities have an increasing population, a positive demographic development. Yeah. So where
Mhm.
the people are moving to, there you can invest. Of course, maybe not directly in the city center, because their prices can be maxed out and there's no space to build more buildings and so on. But maybe in the B zone or the C zone, the suburbs of a rich big city.
Right. Okay. So, if we have to talk about the second problem, the in which there can be very unexpectedly very high maintenance cost, how can one make sure that this does not he does not have to deal with that?
Yeah, by asking questions. So this is also an advice, a well-meant advice that I can give to everyone. If you invest in anything, then don't take assumptions, ask questions. This is very important. Really ask as many questions as you can to really understand the current condition of the property you are going to buy.
Mhm.
And if the house was recently modernized, like if, when they built in a new heating, when they replaced the windows 10, 15 years ago, when the roof is in a good condition, then you can be sure that the risk of upcoming costs is reduced. Yeah. And also, if you buy an apartment that recently has been renovated from inside, now I'm not talking about the whole building. The building has to be in a good condition, but also your apartment from inside.
Yeah.
And when you can make a check behind both the topics, the building and the apartment is in a good condition, then you can be sure that for the next, hopefully 10, 15 years, you don't have upcoming costs. For the case of cases, I always recommend to build up a private emergency fund. Yeah, for every property, put 50 or 100 bucks by side, leave it in your bank account, build up your emergency fund. In case anything happens, then you have some liquid money to pay for it. I think then you are safe.
Yeah. Um, So we have talked about almost the whole life cycle of when somebody wants to invest, what can be the risk. I also wanted to do this exercise. I know we cannot have an elaborate exercise in the interest of time, but to give an idea in terms of numbers to the audience, can you give us some ideas in numbers of everything? Let's say what somebody invested, and let's say somebody is in the highest tax bracket. This much they could save in the first year, and then after 10 years, if they made a sale, assumed of a fair on the fair assumption of what the appreciation was, how would the numbers be?
Yeah. To break it down, you can expect, let's talk about the 10 years period. Yeah, acquiring real estate, selling it in 10 years, returns of 400 to 800% are realistic. It
Wow.
always depends. Yeah.
Mhm.
Yep. It depends on your financing. So the biggest returns you always achieve when you have a 100% financing. So this means the mortgage is fully covering the purchase price. You just pay the 8% for the additional purchase costs.
Okay.
8% of the purchase price, this is your investment. So this is very, very small amount. You basically leverage your equity, your capital times 12. So every appreciation in value that the property makes, you can multiply by 12 and you have your return or your capital gain. So let's say 600% in 10 years is possible. And in addition, upfront tax savings, 40% of what you invested.
Okay. And what about on average, what can be the interest rate which one can get? There can be several categories. Somebody who is a permanent resident there here, or a citizen. So how are the numbers there?
Yeah. Interest rates, this is a very interesting topic. And most people always scream and shout, oh, interest rates are so high. Let's not invest in real estate. Let's wait. So I always teach about the timing of the market. So may I give your audience a small background of
Sure.
the market?
Yes, please.
Sure. Yeah. So let's talk about the market. How is it developing? And then we can talk about the interest rates. And I would like to start the small journey in the year of 2008. Basic economy education level. Do you know what happened in 2008?
Yeah, the housing recession.
Yeah,
And
yeah,
basically recession
exactly.
then, yeah.
Recession. Yeah, so the Lehman Brothers in the USA went bankrupt. Why? Because back then they gave mortgages to poor people to finance their home. This is called subprime loan. So basically a loan of low quality. And because of the rising real estate prices back in 2008 in the US, the people started to re-encumber their property to get more money out of it. So let's say they have a mortgage of 100,000 euros, but now suddenly the property is worth 120. So they go to the bank and say, hey, dear bank, please give me another loan of 20,000 euros. This is what they did.
Okay.
Problem was the people having the subprime loan, these were financially weak people. So they used the loan that they get to pay their bank installments.
Okay.
Yeah. And doing this thing, the inflation went very high because banks were printing more and more money and giving it to people that are financially weak, and they finance real estate way above their actual value. And so inflation went high. They had to increase interest rates, and this whole system collapsed. Yeah, and because American investment banks sold their mortgages as bonds to the whole world, there was then the worldwide recession. This was the reason that triggered this worldwide recession. And in Europe, we actually had a similar situation over the last decade. So money was cheap, people bought real estate, the bubble grew, and yeah, we had prices that were higher than the actual value of the property.
Okay.
And Corona, war in the Ukraine, and so on, was like a reset to the average price level. The prices went down. This is what we now see. We have, in Germany, we have a housing shortage because we had very low building permit rates. The building companies stopped their projects. We built less properties than the German government wants. But on the same time, we have a very high demand. More and more people are moving to Germany, especially to the big cities. Prices are on a low level because of what I just mentioned, the reset after Corona and war in Ukraine. And now, interest rates. What happened to interest rates during Corona?
They
Do you
went
know it?
down. They went down.
Actually, before they went down, they were on a very, very low level, 0%, 1%. But then there was an inflation in Germany of 8 to 10%. So European Central Bank had to increase the interest rates. I think the peak was 4.5%.
Okay.
Yeah, so the money was then very expensive. People were not able to afford real estate anymore. But now, on 6th of June, yeah, a few weeks ago, did you follow the news around European Central Bank?
I guess 0.25% is reduced. Yeah.
Exactly, yeah. So the first cut in interest rates in 2 years.
Oh, okay.
Yeah, yeah, in 2 years. Interest rates were very high and now they go down. So to sum up, we have a huge housing shortage in Germany. So supply crisis, we have increasing demand, we have low housing prices, and the interest rates start to go down again. So we have actually a pretty similar situation like after 2008. We had the recession. Now the German economy starts to recover, starts to grow again. And what happened to real estate prices after 2008?
They went up.
Skyrocketing.
Yeah. I
When
have
people,
sorry to interrupt. Yeah, please go ahead.
yeah, I just wanted to add when people ask me about interest rates, then first of all, I give them the background and show. So when interest rates are high, then after this, the prices go up again. And in the world of investment properties, interest rates are not so important because we can deduct it from our taxable income. We can save taxes with our paid interest rates.
Mhm. I have a very dumb question because correct me if I'm wrong. Germany is open to foreign investors as well who are not the residents of Germany to buy property here, which is, I guess, not the same case in a lot of countries like Netherlands. You have to hold a permit.
Yeah.
So this opens avenues for a lot of companies. Why exactly did we have the supply shortage till now? Is it because it's only in the like we are in a period when it's going to catch up now, and in the last few years it was not the best period for people to invest in real estate? Why there has been a shortage exactly?
So actually the biggest problem, yes, we build less than we want to
Mhm.
because it was way too expensive, inflation, material prices were high. But actually the biggest problem that we see in the German markets is that old people live alone in way too big apartments.
Okay.
So we have a lot of old people, like the in Germany we call it the baby boomers. So in the 60s we had very, very high birth rates in Germany,
Mhm.
and in the 60s, so it was 60, 65 years back. Now they retired. These people are old. So yeah, these people coming out of this baby boomers, yeah, so the years with the high birth rate, they now all retire. These are old people not working anymore, but still living in their way too big apartments or houses, because back then real estate was affordable for people. So
Okay.
this is basically the biggest problem. We have limited space and we have less people in, or yeah, we have just a few people in a lot of living space.
Yeah.
This is the main problem. Yeah.
Okay. Sounds good. Yeah, it's been a very informative session for a person. I would count myself in, although you have educated me a lot, but still gives a fair idea of how to like what decisions to take, what to think about, and opens up new possibilities to a lot of people who did not know before that real estate can be such a good investment, specifically in Germany. Uh, do you have any specific advices or plan of actions to people who immediately, probably after watching this video, would get interested in it and how they should be treading forward? And in general, what advices would you have?
Mhm. So I already mentioned one advice, yeah, ask questions and don't take assumptions. This is important. Try to understand it. And the other thing is what I always preach, luxury comes from smart investments, not foolish spendings. So most people want to be financially free. They want to afford luxury, and it's a big mistake like buying a home. This is a luxury thing, buying a home on mortgage,
Mhm.
because this is a foolish spending. First of all, build up wealth, do smart investments, and have such a big wealth that your passive income that you generate every month, very stable, can pay for your dream life.
Yeah, that's I guess a very important advice for myself as well. I personally am very good with managing my expenses and yeah, having the growth mindset there. So yeah, if we do not focus on that right now, like I would say, we are in the prime years. Uh, as early as we start, it's going to be very good in the future. So thanks a lot for that advice. And yeah, to our viewers, I would like any kind of questions you would like to ask or book a consultation with him. I will be sharing a lot of like all of his handles and websites and website about IRE Berlin for whatever information you would need. You can connect with him. And yeah, I would really like to say this thing before we wrap up. It's very comfortable to talk to you, and I find it very nice that you you are very energetic and you promote asking questions. It's not like you would be like, okay, this is a thing, and let me handle it, and this is what you should be doing. You would actually focus on educating the investor. That's a very like good thing I would find in a consultant in general, and even outside of our relationship regarding this consultation, I enjoy really talking to you outside of work. So, and I am very grateful that you took out time on a Friday late evening for this call. So thanks a lot for joining us on this podcast.
Thank you very much, Abhinav. Thank you for providing me this wonderful platform, your YouTube channel, to spread a few things and to give my 50 cents. And I can just also thank you very much for being in contact with me all the time, for laughing, for sharing private insights.
Yeah,
And yeah, I really enjoyed it. And maybe we see us again in future here.
sure.
I would love to.
If people have a lot of questions and our comment section is filled up, we might have a part two for this for sure.
Cool, cool. Let's
Okay.
see.
Yeah. So enjoy your weekend. Talk soon.
Talk to you later. Bye bye.
Bye.